Welcome to the J3 Collaboration Project. My name is Jack Wilson, and I'm going to be your host today. We have a very special guest, and we're focused on a very critical part of the franchise process. But first, a little bit about J3. As most of you know, J3 consists of three independent business people, myself, Johnny Romero, and Jennifer Callender. And we have a three-pronged passion that is common. It's exactly the same for all three of us. First, supporting and enabling business ownership for African Americans, Hispanics, and women. Second, advocating business ownership and diversity. And then third, we want to make an impact in our respective communities. So that's who we are. But today, it's all about our guest, Richard Snow. Let me tell you a little bit about Richard. Richard is the Vice President of SBA National Franchise Relationships and Management at WSFS Bank. He's responsible for SBA financing to franchise brands throughout the United States. He's also played a critical role in guiding entrepreneurs in the U.S. and the Canadian franchise industry through that complex process of small business lending, funding over $200 million in SBA loans in 2018 to 2019. Richard is the chair of the International Franchise Association Black Franchise Leadership Council, board member for the IFA Diversity Institute, African American Chamber of Commerce in Philadelphia, the past board president of the the Business Center for Entrepreneurship, and the MBMBAA Philadelphia chapter board member. Richard was featured in the Franchise World magazine in June 2022 and national speaker at the IFA conference in San Diego, California in 2022. Mr. Snow is also the host of the Smart Start Now podcast. As a speaker, Richard recently hosted and coordinated panels discussing the challenges and barriers facing Black entrepreneurs in franchising with the U.S. Black Chamber of Commerce CEO Ron Busby, two-time NFL Super Bowl champion Malcolm Jenkins as well. He worked with Representative Alma Adams, the HBCU caucus, and Benedict College president Dr. Rosalind Clark Artis to share the world of franchising with HBCU students. Richard and his wife of 14 years, Denise Marie Snow, and their two sons reside in Cherry Hill, New Jersey. We're excited, Richard, to have you. Welcome.
Thank you, Jack. Thank you. I'm glad to be here.
Excellent. Well, Richard, you and I have known each other now for a good number of years, and I kind of describe our conversations as, me, the pupil, sitting down, listening to the teacher as you tell me everything that's behind the scenes in the world of funding. So I appreciate your mentorship and your passion for people who want to own businesses and getting them the access to the capital they need. So I appreciate that about you, Richard.
I appreciate that, Jack, as well. And it goes both ways because you provide a lot of knowledge from the franchise development education piece. So it goes both ways about the network and relationship.
I absolutely agree. And that's a great segue into what we're talking about today. One of the most important parts of the franchise process, that's the process when somebody who is exploring business ownership through franchising decides, hey, I'm going to, either reach out directly to a franchisor or work with a franchise consultant like Jennifer Callender or I, or just do some exploration. Part of the process is, hey, what can I afford? What funding can I get and from what source? So, Richard, you're going to help us with that today. And I think at the end of this discussion, we're going to all be better educated and we're going to know what we need to do and depending on where we are in the process. So let's start with a few questions, Richard. The first one is, how would I or a candidate show up as a strong application for funding? What needs to be in that?
So I think the first piece you want to look at your credit, making sure that your credit score is strong. Typically for a franchise startup, acquisition, or a resale, you need a 700 or higher credit score. Second, you want to do an analysis on your net worth. So you want to look at your personal financial statement, look at your asset versus liabilities, showing that you have the right liquidity position, collateral position within real estate to support the financing of the loan. I think the third piece you want to take a look at is your transferable skill sets. What do I bring to the table that lets the credit manager and the relationship manager know that I'll be a good fit to run this business? Do I have command of the business? Do I have a business acumen to run? Do I understand operations? All these create a sense of comfort and to support with the narrative of mitigating risk.
Mm. Well, that was a lot right there. I think a lot of people right there are taking a breather as they're looking at their notes because there were several things there that we're going to kind of touch on again. Now, you mentioned a number of steps. Now, those steps are those steps that person should do in general, or are they steps that somebody who's looking to take advantage of an SBA loan absolutely need to take?
I think absolutely needed for the Small Business Administration loan, but also in general, because when you have investors or individual VCs, or you're presenting yourself to the brand typically is going to have some form of QSR or Zoracle application process where they need to understand that you're a good fit. And they're going to go through a funding analysis of you as well. So I think having that baseline foundation is going to be important through the SBA process, lending process, investment process, and also the vetting process with the brand.
Got it. And when Richard mentioned a Zurich or QSR, that's information that's taken from the candidate, the potential franchisee, and sometimes they're in an assessment format. Sometimes they're analyzed based on input that the franchisee would give to the franchisor or to the franchise consultant. You can probably already see for the viewers who are here the value that an experienced, well-connected franchise consultant can bring to the table. They can help guide and navigate through questions that you may have with your banker like Richard or with your franchisor. And for franchisor development teams, obviously looking for funders like Richard that can explain things so that you have a good idea of how to help your client. These are just all critical pieces to keep in mind.
Agreed.
So, Richard, you mentioned a number of things there. When should someone start preparing those things? Because in my experience as a SCORE business mentor, I sit down and meet with a lot of people who have small businesses or thinking about starting small businesses. And sometimes I mention some of those terms you mentioned, and either I see fear on their face or deer in a headlight looks.
Right.
Things like credit score, things like having their financial statements prepared, balance sheet, cash flow analysis, and things like that. How important are those things, and when should they get started on them if they don't have them?
I would say if you're having a thought process or you're beginning to have a conversation with a franchise brand, I would say immediately so that you don't create any bottlenecks within the process. So you want to really go back and make sure if we're in 2022. The tax deadline has already passed. We're now in extension. So you need your 2021, 20, and 2019 tax returns. That's a given for any lender. Second, they're going to also want to see, most current statements. So you want to make sure you begin to create a form of funding package or SBA package. Your 413, which is your SBA personal financial statement, you can complete right away to give that snapshot of where your liquidity position is at. Your 1919, which you'll see, these are SBA documents, whereas that's your personal information, your application that you'll go through, understanding your percentage of breakout of ownership. You can begin to create your EIN if you know you're going to start that business. And it's a franchise. Typically, it's the name of your company doing business as the franchise brand. So there are some foundational pieces that you can create up front and then present that to a lender to be able to get a term sheet because you have not or get pre-qualified. It's important to know that you have those foundational pieces needed to get financing even though you don't know exactly what the project is as you go through your discovery process. You can complete the 413, the 1919, your tax returns, your resume. You can give all of that information in and begin to get a pre-qualified assessment of where you stand from a fundability uh, strength process with the SBA and with that particular institution. So you can do some homework up front. So when you get in front of the franchisor and you're having a conversation, it makes you that much stronger as a candidate, knowing that you're already vetted for financing, knowing that you have the right cash position. It puts you in the driver's seat.
You're absolutely right. And, to help us connect the dots and maybe give us something that we're familiar with to understand what you're saying there, Richard, is for those of us who have purchased real estate, who have purchased a house, we don't just go out looking for any house. We look at a house we can afford. And to do that, we typically work with a bank and get pre-qualified or pre-approved so we know how to zero in on things that fit our investment level. No different, right?
No different. Exactly the
Excellent.
same.
Excellent. Well, that helps us understand that. Now, you mentioned a couple other things too. For example, you mentioned net worth, right? So, how would a person show their net worth when they're interested in investing in a franchise?
So one of the ways that you will look at it, so typically we're going to look at your liquidity position. We're going to look at your marketable securities, which is stock, your retirement, and if you use any form of ROBs to liquidate those funds. And then we're going to take a look at the real estate you own and any personal property, automobiles, or any other affiliate business. That's your asset size and your asset side of the equation. And then you're looking at your liabilities. What's the outstanding debt on that mortgage? Do you have any revolving credit? Is there any installment loans? So we're looking to see how you manage the two, what's left out there, and making sure you're not over leveraged. Remember that 30 to 40% debt to income ratio margin. Those are important to make sure that you're managing your personal finances, to make sure that you have salary coming in. That's another piece we can touch on because as you start a business, and if there's two individuals within a household, have a plan or a strategy, maybe that somebody's going to keep a secondary source of income and one person is going to go off and run the business because you want to make sure you have that time and that window to properly ramp up if you don't have the strongest of cash positions. You want to make sure that there's some revenue continuing to come into the household. So these are some ways that you can look at your net worth, but also prepare yourself for that funding conversation with a franchise brand or a bank.
That's excellent input, Richard. And that you dropped a nugget there that I want people to really pay attention to. If there's more than one in the family who have income coming in, a W-2 income, that's a good thing. You don't have to say, no, both of us are going to quit our jobs and we're going to be all in on this franchise business.
Right.
That sends out red flags. Maybe eventually you both will. But having that constant stream of revenue coming in from the W-2 gives you a longer runway to get your business up and flying to the point when it does make sense to then be able to replace that other income with the revenue generated by the business. Thanks for sharing that nugget, Richard. A lot of people don't realize that.
Oh, you're welcome. You're welcome. And one other piece, I use the acronym ROBS. That's rollover for business startups, where you can actually utilize some of your retirement funds, tax deferred and penalty free. You can roll that over into a retirement plan, and it can be utilized for your equity injection requirement for your SBA loan, which is typically between 10 to 20%.
Yes, great. And there are firms that do that professionally. They know exactly what to do.
Yes,
And they can do that and prevent you from having the big tax hits and penalties and so forth.
that is correct. That is correct.
Great. Great. Thanks for hitting on that acronym for us there, Richard. Now, let's say that everybody's done all of this work, everything that you've suggested, and they're trying to get funded from the beginning to the end. How long does the process typically take just to help set expectations?
So if you look at it from beginning to the end, the initial paperwork that you need to complete, the SBA, again, I'm gonna list these out again: SBA Form 413, SBA 1919, your debt schedule, 3 years of your personal tax return, and this is for a new startup, your resume, a copy of your credit report or score. Those are basic information that doesn't take a long time to complete. Where the real meat of it becomes is when you need to create your business plan and your 2 to 3 years financial projections and provide your FDD. That's when you have isolated and understand the brand you're going to move forward with, and you need to present that package. So once that's submitted to the bank, WSFS Bank, me the lender, I can go back, look at that information, review it, and have a term sheet out to you within 48 hours. A term sheet is basically an interest to finance. You fit within our loan policy. You fit within our credit box. We've done some initial analysis on you, and you have a term sheet. Once you sign off on that term sheet, most banks have what is called a packaging fee. That fee can be anywhere from $1,000 to $2,500, depending upon the lender. From that standpoint, you submit that in with your signed term sheet, and you begin your underwriting process. Your underwriting process can take anywhere, typically from a week to a week and a half, to go through your underwriter, because the underwriter brings comments back and asks questions, clarifying questions to approve the credit properly and complete the credit memos, what we call it internally within the bank. From that point, you'll have a commitment letter. That commitment letter, that's your golden ticket. That commitment letter is stating that you're approved for financing through the institution back, and they're willing to support you with the financing for your new franchise brand. Once you have that commitment letter, immediately following that is your closing checklist. The closing checklist is the piece of this process in which I say is organic, because depending upon the process itself, you're either going to need your insurances, your general contractor bid. So you need to get a bid from your GC. You're going to need your lease agreement, your executed lease agreement or your LOI. That's going to let you know with the lien waivers and everything that's included, the term of your lease, your insurances, your workman's comp, your hazard insurance. You need to compile and get all of these documents in. You need to verify your equity injection. So all of these documents, I say, is the organic process, because some of these items have third parties connected to them. So if you decided on a franchise brand, but you haven't picked the location, that could take some time based upon your discovery process for your location. If you have a location, but you haven't picked the GC, that could take some time to find the right GC that's at the right price point. So these are the organic pieces of the process. So normally I can see that take for a client anywhere, I would say between 60, maybe 90 days at sometimes for a brand new franchisee to get all of those pieces together. If everything's well oiled in together, you can get it done in 60 days, completed, and knowing that you're going to start to build out. Now, here's a unique piece of the SBA loan process. We want to make sure you don't close your SBA loan like you would a typical mortgage. They want to make sure that your closing lines up with when your build out is going to start up, when your leasehold improvements are going to start, because you don't want to close a loan and you're starting your interest payments and you haven't started your build out. We want to make sure we're giving you the right amount of runway. And typically most lenders will place in there an interest only period. That interest only period is to cover your build out period. So if it takes 3 to 6 months or 6 to 9 months to build out your space, well, that's an interest only loan leading up to the completion of that build out. And then the principal and interest payment will start when you open your doors, giving you some runway, giving you less of a larger payment to be responsible for. And most prudent lenders will place in there an interest reserve in that loan. And that interest reserve is to support in paying that interest only period while you're ramping up and while you're building out your space. So these are all important factors to include, because some of these items are not in the FDD. When you look at the item 7 in the FDD, they have a breakout of the total project cost, but typically they won't have the 10% for the leasehold improvement contingency. They won't have the interest reserve or the SBA guarantee fee. These are some other items that are included as you go through the funding process.
Well, Richard, that certainly was a mouthful, and we appreciate your expertise. And it really underscores the importance to start early and to have guidance.
Yes.
I think back to when I first became a franchisee back in 2012. I had a franchise consultant who guided me through all of this. I had no idea what I was doing until that consultant did that. And as franchise consultants, that's what Jennifer Callender and I do for our clients. We help them with their interactions with the bank, with their interactions with the franchisors, and we just take some of the burden of having to remember everything and to know anything off of them, and we just become their guides to work with folks like you, Richard, and the franchisors. Now, you mentioned so working with certain franchisors, are there any profiles of whether it be of brands or industries that are great partners for WSFS lending services? Are you specific in that at all? Do you have any?
So typically, what we look at from a brand, and not in particular leaving one name out, but what we look at when we look at a brand, we typically use the Fran Data as a lens. Fran Data is a great company that supports in tracking the performance of a brand, and we look at their projected success rate. We look at their historical success rate, how the brand has performed. We look at their market penetration, how many units do they currently have. Gives us a good idea of the operational strength of that particular brand. We look at their attrition rate. If you open up 20 in a year and you close 15, then you have a negative attrition rate. You're not retaining those franchisees. So we take a look at all of those items, and then we look at the leadership behind that brand. Do they have experience? Do they have a track record? Are they under a strong franchise development umbrella? All of these play into the strength of that brand. And usually that plays into the underwriting, because if you have a strong franchisee and a strong brand, you have a winning combination. If your brand is emerging, then the franchisee needs to be that much more stronger, because the brand is emerging and developing and creating operational structure and creating a historical piece to that company. And then the Z that's coming to the table needs to be stronger from a liquidity standpoint, maybe a credit standpoint, better business acumen, because the two are working together. Understand it's a partnership, especially when a brand is developing from the beginning. They're looking for strong Z's that's going to set the tone, because they are setting the tone from a marketing, from an operation standpoint. You're as a new Z with an emerging brand, you're that marquee marketing, branding individual that is out there showing the next franchisee this is a great investment. So that's why it's so critical to bring the right Z's in and present yourself as such.
Yeah, that's again another golden nugget there. A lot of people don't realize that the strength of the franchisor coupled with the strength and projection of success for the franchise candidate, increase the probability that that funding is going to happen. And weakness on either side obviously causes some shoring up to be needed, even to the point where it may not go through. So that's what we want to ask about, Richard, right there. What are some of the common themes for the denials that do happen?
So one credit, if weak credit score. Two, lack of development within your business plan, showing you're not showing your competitors. You don't have a great sales or marketing strategy. There was no study taking place in regards to your brand's performance. Your executive summary, that those have big pieces involved in it. Your projections, are you just doing a plug and play, or are you showing the seasonality of your brand? Many times you'll see somebody put together projections and their revenue, and they'll say, I'm just going to put an example, I'm going to make $20,000 a month every month for the whole year. That's not realistic. You have seasonality, fluctuations in your sales cycle. So if I'm in the sun tanning business, obviously, the first quarter is not going to be my strong quarter. Then, unless somebody's traveling, it's going to be more along that third quarter, summer, going into spring, where people are exposed to their body a little bit more. If I'm in the lawn care business, okay, I'm not going to make that much all the way throughout, because there's a period in time where the grass begins to die, and maybe you're transitioning to snow removal. But if you don't have that transition, then obviously your revenue is going to decline throughout that cycle. So you have to have some reality and some command of how your business works, and showing that fluctuation and that seasonality within your business, understanding the cons of your business. So if you're in a business right now that is labor focused, then we have a lot of labor shortage taking place. If you're in a business that's inventory focused, then we have some supply chain issues. Understand how you're going to get around the common gaps or pitfall areas of your business, and how you still plan to be successful. I think the COVID economy that we're coming out of, that was a big test, because you found businesses that became essential. You saw some companies pivot a different direction. You saw the whole food industry pivot towards QSR. So, they had to make these changes to survive and stay strong. And then for some, if you were already weak, it pushed you over the edge and you went out of business. For some, they grew and took that as an opportunity to acquire more business. So you have to show that ability to be agile and pivot, and have that latitude, and have the smart acumen of business in there. So those are things that are important when you're presenting that to a lender that could possibly get you declined if you don't show them the right way.
Yeah, I agree. There's a number of things that could be done up front to kind of give you some ideas as to what may be areas of weaknesses that you can fix. And you had mentioned some of those. You may recall, Richard, when you and I were out at the 2022 IFA convention in San Diego, there was a panelist in one discussion, and he was a representative for the city of San Diego, I think for their business economic development council or something like
Yes.
that. And he was yes, and he was speaking to folks about getting resources that can help guide you through this. Now, we know of at least two resources. There are many, but it's worthwhile looking for them to help you with some of these things. At least two resources that don't charge someone for their services. One he mentioned was SCORE. He said they can help you with your business plan. They can help you with, understanding the different components of the business plan, and so forth. Well, that's one piece that you had mentioned that tend to be some areas of weakness for those that get denied.
Oh,
The other Yes. And the other area you mentioned had to do with, understanding the FDD and understanding the marketing plan and so forth. Well, that's where a franchise consultant, another resource that doesn't charge for their services, can help guide the person to understand where they take pieces of the support they're going to get from a franchisor out of the FDD and plug it into their business plan, so that the lender can see that, I do have the support in the marketing area and in the location, finding my location services that are going to be given to me. And that's another thing a franchise consultant does. All of these things aren't guarantees that you'll be approved for a loan, but they help mitigate the risk of denial. And that's really what we're trying to do, is put you in the best place to be able to get your business loan, so that you can realize your dream of business ownership. Richard, what about WSFS? What services does WSFS provide to interested franchise owners?
So one of the things that we do, and I'm honored and happy to support with, we do support with first unit franchisees, multi-unit franchisees, acquisition resales. We do support nationwide franchising for our approved franchise brands. And if you're more of emerging and you're just getting started, we work with you within our footprint. Our footprint is PA, Jersey, Delaware, Maryland, DC, Virginia. So we work with you within those footprints. So we have a little bit more latitude because that is our brand, that is our community that we can support you in. But we support quite a few brands nationwide with nationwide financing, no matter where you're located within the United States of America. So that's what we support from that standpoint. And we are a PLP lender, a preferred lending provider. So we've given the SBA has given us the ability to support and underwrite our credit in-house. So we're not going anywhere else. We're not working with a loan service provider or third party. Your loans are not going any other direction. Everything is being completed in-house, utilizing prudent lending practices to complete and get that done. And we stand for service. We've been around since 1832. We're one of 10 oldest financial institutions within the United States. We have strong community ties, and we're here to support. We do a lot within the community to financially educate and provide the information required. As you see here, I'm working with J3 to go through the process of helping you understand and educate your audience on the process of SBA funding for franchising opportunities. And we're glad to continue to be a supporter.
Excellent. Well, I have to admit, with you, Candace Caruso, and the entire WSFS team, we're never disappointed. We learn, we help clients, and we love being able to work with you guys. I know we talked about a lot of things, Richard, but is there anything maybe that we didn't bring up that you think our audience needs to hear or know in this forum?
No, I think we pretty much hit on, in this short amount of time, we hit on a great synopsis. Remember, SCORE is out there for SBDC, Small Business Development Centers are out there for resources. You can always reach out, Jack, and the J3 team will provide my information to you. And then you have them as consultants. So you have your resource, you have your network here, your community to support you overall as you partake in this journey.
Excellent. Thank you, Richard. Well, whether you in the audience are a franchisor or a member of the franchisor development team, or perhaps you're someone who is considering business ownership, considering franchising as a viable option to that business ownership, the resources and the information you heard today should be of value to you. We'll have Richard's information so that you can contact him and WSFS Bank. We'll have that available for you. And we look forward to the next time that we have a video like this, because it's always going to be the same. It's always going to be instructional, and it's going to be relevant, and it's going to be focused on people being able to realize the dream of business ownership, as well as making an impact in their community with doing things like jobs and having a platform and a voice, and to be able to create a family legacy and have something more than just a retirement fund, something to give to our children, something that keeps the business in the community, and something that gives everybody a great example of what can be when you really focus on realizing that dream of business ownership. Thank you for being with us today,
Thank
Richard.
you, Jack, for having me. I'm glad to be here, and will always be a resource to J3 platform.
Thank you. Well, there you have it. That's our video for today. Please reach out to J3, either Jennifer or Johnny or myself, or go directly to Richard. He'll be able to take care of you. We look forward to seeing you again soon. I'm your host, Jack Wilson, with the J3 Collaboration Project. Thank you for joining us. Please like and subscribe. Until next time.